Hello and welcome to stage one from wherever you're joining us today. This is the first day of the ACT annual conference, and I hope you've already bookmarked some of the almost 40 sessions we have this week. Our theme for the conference is Balancing Risk, Champion Sustainable Growth. And when we set this theme, I guess, towards the end of last year, in many ways, the world seemed a much more predictable place. And although climate change was a sort of hot topic, most organizations were developing 5, 10, and sort of almost 30-year plans. COVID-19 has clearly thrown many of these plans off balance, but it's very clear that the underlying drive towards a greener and fairer planet seems here to stay. Now, although financial services business, including banks, are developing a wide range of products to help corporates deliver on the ESG agenda, there's still a limited range of options to the treasurer, whether as a borrower or as a lender, based on some of the conversations I've had with treasurers over the last few months. So what have the banks been busy doing, and what are some of the challenges that they face? Helping us get a better idea of what's available and what's in production, we've got a couple of folks from HSBC, and we're also fortunate to have with us a treasurer who's going to share his thoughts on the part his team are playing in the corporate ESG agenda. Now, before we get going, some housekeeping. We've got an audience Q&A. There should be a toolbar at the bottom of your screen that has about, Q&A, polls, survey, etc. Throughout the session, please feel free to submit any questions in the Q&A box, and we'll try answering those as we go along. As a reminder, this session is being recorded and will be made available for replay on the event platform shortly after the session finishes. Also, get engaged with us on social media. We've got an active LinkedIn group. You can follow us on Twitter with @ACTUpdate and tweet using hashtag ACTAC20. Now, before we start, let me make some introductions. I'm Naresh Agarwal, and after over 30 years working Treasury, I now provide policy and technical support here at the ACT. Joining us, we have Robert King, who's Head of Sustainable Finance, Structured Finance, HSBC. We have Martin McNamara, EMEA Liquidity Product Specialist, Global Asset Management, HSBC, and George Duncan, Head of Group Funding at SSE. Robert's the Head of Sustainable Finance for HSBC UK, where he's responsible for promoting and developing sustainable finance propositions and supporting corporate clients in their transition to a more sustainable, low-carbon economy. Martin's Liquidity Product Specialist for HSBC Global Asset Management, where he has responsibility for engineering and delivering a number of strategically important regional and global product development and growth initiatives. George joined SSE plc in 2010 and is currently Head of Group Funding, where he's responsible for issuing £12 billion of bonds and other debt, including over £5 billion of hybrid bonds, £1.5 billion of green bonds since 2017. He's also responsible for converting the group's £1.5 billion committed facilities to being linked to a sustainable KPI, which has now been achieved. Prior to SSE, George was Assistant Treasurer at Agreco for 7 years, and before that held various Treasury roles at BT, Inchcape, and Morgan Stanley. So, George, before we can hear from the banks, can you tell me about SSE's ESG journey, and in particular the role that the Treasury team has played?
Hi, Naresh, thanks, and morning everyone. So to give you the background to SSE's story in green bonds, it really started back in 2008 when SSE started the journey to evolve into a renewables company, when we acquired the Irish wind farm developer Airtricity, and we've been investing heavily in on and offshore wind ever since. SSE Treasury, we've always looked to try and find innovative ways to finance the capex for the group. And obviously we looked at green bonds fairly early on. However, there were a couple of blockers into us actually entering that market. The main blocker was that the additional costs from issuing a green bond at that time were significant, and especially when it came to cost of carry. Now, there was a change probably around about 2015-16, where it changed the green bond principles to allow the refinancing of green assets, and that helped us take forward our green bond issuance projects. And in 2017, we actually set up a green bond framework and issued our first green bond. We've since issued another 2, so we've got 1.5 billion outstanding at the moment. I think the main issues we have at the moment is actually adding additional assets to our green bond framework to allow us to issue future green bonds from a corporate perspective. A large part of our capex program at the moment is in offshore wind sector, which has been project financed. So there we're more focused on ensuring that we get some recognition in terms of the green loans that are being put in place to finance those projects. So I think that's probably all I've got to say at the moment, Naresh, on the sort of introducing SSE's renewable bond credentials.
Okay, well, thanks very much, George, and I'm sure we're going to hear more about it during the rest of the session. I noticed that you talked a lot about CapEx and funding, and we're going to ask Martin, you work in the asset management side. Is this normal in your experience, and is there a reason why that is?
I think that in the main, that experience is generally true of large corporates where there's a more obvious link to sustainably linked projects. I think more generally, we're seeing a real disparity, a distribution, if you like, between those companies, those corporates which are just at the beginning of their ESG journey, those in the middle, which are looking to try and conform with some regulation or some or signed up some voluntary guidelines or principles and that they're trying to adhere to. And then at the other end of the spectrum, we've got those corporates with a really well-developed philosophy on ESG. And those corporates are really looking to drive the debate and call themselves out as a leader in this space.
Okay. Robert, do you agree with the colleague there?
Yes, I think on balance, I agree with Martin. Historically, corporates have focused on the debt side first. I think, and as Martin said, particularly in sectors where there's a lot of investment in green projects, so the rationale for accessing the debt market for green products is clear. I guess maybe if I could extend the question, if clients do access the debt market, which market do they access first? Is it the bank debt market or the institutional debt market? If you look at the volume of ESG-related bank lending versus the bond market, it would suggest the answer is the bond market. There's far more green and ESG-related activity in the bond market versus the bank market. But yeah, I'd say the number of sustainable finance products that banks offering is growing rapidly, and it's true that generally banks can be more flexible and adaptable. You can more easily seek to modify terms in the debt market. So I suggest the bank debt market might be an easier place to start for some corporates who are making the first entry into the sustainable finance market.
I'm just going to pick up one very quick question there, because one of the things that I'm very mindful of, this is for you, Robert. Some of these loans require you to sort of sign up for 5-year KPIs. Is that a challenge for you as a bank, for a corporate? What's your view around that?
Yeah, it's a good question. It can be a challenge. I guess the first thing, which may be fairly obvious, but the borrower, the corporate, needs to have an idea of what KPIs are important for them and their business, and have some idea of what their targets are over that medium term. I think where it can be challenging is where that performance year on year can be impacted by external factors which are maybe beyond your control. So that's one thing that we sometimes see as a challenge.
Okay, great. One of the things that I've certainly spent a lot of time trying to get my head around are the various standards which come out sort of almost every week, guidelines, principles. And I must confess, I find it very confusing. George, can you tell me which sort of principles and standards you've been following? Which ones you developed as part of your green framework?
Yes, I mean we've definitely concentrated on ICMA's green bond principles. So that's allowed us to demonstrate clearly by following principles what the intention of the use of proceeds of any green bond that's issued, how the projects that go into the green bond framework have actually been selected, that there's been some thought by senior management in terms of agreeing to which projects will actually be included, and then also we make it clear how we're going to actually manage the proceeds once the bond's been issued, and then probably it's almost the most important one is actual reporting afterwards, to show investors, actually that the proceeds have gone into the projects that were stated initially, and what carbon saving KPIs we're using to identify the benefits from issuing the green bonds and the assets that we've invested them in. So that all goes along with having quite a lot of insurance behind. So we initially have a second party opinion from an ESG consultant to verify that our framework does meet the green bond principles, and we have auditors in to make sure that any assurance report that we publish has been checked and verified, and this is all really around making sure that the green bonds that we issue are included in the various green bond indices out there, and give investors the comfort that they need.
So being included in some of the indices, I guess, is quite important. Robert, you must have seen a much, some other alternatives. Could you share your views? I know the ICMA Green Principles are really valuable. A lot of people are using them, but I guess there are others as well you've seen. Could you share some thoughts on what they are and why you see people using one versus another one?
Yeah. Yep. So from the bank debt side, the LMA green loan and sustainability linked loan principles are the key ones for HSBC. HSBC, we were one of the first banks to align ourselves to both of these debt base. We aligned our debt-based sustainable finance offerings to these standards, and as George has said, there are parallel standards for bonds. Maybe it's just worth pausing to say what each product is. When we say green, we're talking about a product where the use of proceeds is for a green asset or projects. And it's generally around projects which realise reduced carbon emissions or environmental benefits. And when we say sustainability linked, we're talking about a debt-based offering where the borrower pays to the lender a margin which goes down if they meet pre-agreed sustainability KPIs. So they're the two main products in the debt space. And standard and principles in the loan market for both of these are relatively new. The green loan principles, the LMA's green loan principles, were announced in 2018. And when they were introduced to set out pretty much for the first time what constituted a green loan, a green bank loan, and how to construct an ESG-linked facility in a manner to ensure the KPIs had substance and were ambitious. So they're the two main ones for us. If you look forward, the EU's taxonomy and sustainable finance will be an important set of standards to be aware of. Whether the UK will adopt that, I don't think that's clear right now. But I think the direction of travel is clear. Clearer standards benefit both borrower and issuer.
Okay. And Martin, for treasurers lucky to have cash, what sort of metrics, principles, guidelines do you see them using?
Well, certainly not the same principles. So the principles that both George and Robert have mentioned are actually quite transactional in their nature. So they're specific to a particular issuance, for example. What we are seeing, or what we're beginning to see more of, is more comprehensive appraisals of corporate activity. So, for example, B Corporate certification, where the entire the impact of the entire corporate is considered, and actually that translates and informs treasury practices far beyond individual transaction, has a much more comprehensive impact on the treasury activity and treasury policy.
Okay, I've got a couple of questions already around sort of products. This one is, Martin, for you. So someone said one of the banks is offering a sustainable deposit. Another one has asked when HSBC will offer an ESG dedicated money market fund or money market deposit. Before we get into those questions, I remember having a conversation with the treasurer almost 2 years ago. She was, in fact, she banks with yourself. She was quite surprised. She'd asked, I've got a bit of cash. I want to be able to invest it in an ESG friendly environment. Can I do it? And her information at the time was there wasn't anything available. And she felt quite disappointed. And it really, I guess for me, surprised me that it wouldn't be quite easy for you folks to really package up something that could do this. What are the sort of challenges you face, and what do you have in terms of either products available or products being developed?
So on the money market fund side, at least at HSBC, we don't have a designated ESG money market fund. However, we do incorporate ESG risk factors in our credit analysis. So that's to say that when we're evaluating the credit of an issuer, we're using the risks associated with the ESG as an input to our overall credit assessment. So when we're building a portfolio, we're building our investable universe that we create our portfolios from, ESG is an input to those portfolios today. But what I would say on the product development side is there's going to be much more to come, and we'll see that over the next year or so.
Okay, so it's watch this space. It's
very much watch this space, yeah.
Okay. I know that the standards are there to promote a degree of transparency. My next question is really about how important is this, and will it eliminate concerns around things like greenwashing? Martin, I'm going to turn to you first on this.
Yeah, so look, transparency is absolutely key to eliminating or answering the questions of greenwashing. There remains much skepticism around on both sides, whether it's the funding or the investment side, and so new standards, new regulation will go a long way towards supporting or to eliminating that greenwashing. From a manager's perspective, looking at corporates and evaluating corporates, it's a real challenge to discern if corporates' activities and the impact they're having and what they're telling us they're doing is actually reflective of the underlying activity. So more calls for more transparency, more regulation around the transparency of corporate activity will help to dispel notions of greenwashing.
And George mentioned a little while back around the use of sort of independent parties to provide verification of the activities. George, could you just share a bit more about that? And is that the sort of thing which, Martin, you think is really useful when you look at companies, rather than I could say doing the work yourself, you're able to use independent organizations to help you get an insight? George?
Okay, yeah, I mean, this is a relatively easy one for SSE. I mean, our 4 main business goals that were stated last year are all around ESG factors. So we have stated that our intention is to reduce the group's carbon intensity by 60% by 2030. Enable 10 million electric vehicles to be on the road by 2030, treble our renewable output to 30 terawatt hours per annum by 2030, and also to be a champion of the living wage and also the fair tax mark in the UK. So we've got some easily demonstrable goals that will help show that our ESG and green credentials. When it comes to actually looking at individual KPIs, you do have to be a little bit careful there. For example, when I refinanced our main revolving credit facility last year, I thought it was going to be a fairly simple process of going to our sustainable team and just saying, well, we've got this goal of reducing our carbon intensity. Can I use that? The issue is that there are going to be bumps in the road for SSE to get to our final goal. There's no guarantee in 1 year that the wind will blow and we'll get the renewable generation output that we need. And also we're we see ourselves as a renewables developer. So we do recycle capital by selling stakes in existing wind farms to help build out some of our new developments, and for a time it means that our carbon intensity might go back up. So when it came to the RCF and looking at a suitable indicator to show our improvements, the carbon intensity wasn't the first choice of the sustainability team, but what we did go with was actually a report from a company called Vigeo, who are an ESG consultancy firm and provide ESG reports. So we went with them, and the benefit we got through the RCF was by improving that score, which we managed to achieve soon after effectively putting the sustainability feature into the RCF.
Okay, and Robert, just picking up with you, we sort of picked a bit around greenwashing. How does it affect lenders as well?
Yeah, so greenwashing, and I mean, really, what is it? It's a reputational risk for both the borrower and the lender. The interest should be aligned on questions such as that. That arises in its more basic form if we don't have enough information around the asset or project we're financing, and the environmental benefits aren't in fact positive. And we've had some really quite complex cases that we've looked at where even though the asset or aim seems at face value to be green, to be positive, when you include the overall environmental impact of the project, it's actually not that clear. So it can be quite complex in some instances, and principles and standards that we talked about can help mitigate some of these risks. And I think one of the interesting things for me about the LMA green loan principles is that for the first time you're starting to look at the wider sustainability objectives of the borrower and how the project to be financed fits within that. And that concept will be taken further with the new taxonomy. You've got the new transition financing products, and they'll also help with those situations where the borrower is moving forward to be more sustainable, but where the asset or project isn't fully green. So you can't access the green market. So then that kind of product will help in some instances. So it is important, and for us, it's one of our key additional considerations when we're looking at a sustainable finance product.
Okay, and you've mentioned EU taxonomy a couple of times, Robert. Could you just, I know, in 2 minutes, give a brief summary of what it is and why it's quite important, or why you think it's important?
Yeah, it's probably going to be less than 2 minutes, Naresh. So look, the EU taxonomy is a really detailed dictionary of environmental positive activities that companies can take part in. It includes concepts such as do no harm. So it's not only the activity you're doing, it's also that you're not harming other things as well. I think it probably is going to be the basis of a set of standards which we'll all use, investors and borrowers, going forward. And it is needed. There is a lack of linkage in some instances between certain sustainable finance products and aims such as Paris or net zero. So I think it will help with that.
And I listened to a bit of the Brexit debate this morning. I must confess, I'm hoping that we continue the trajectory that the EU is trying to develop in terms of providing products, labels, and frameworks for us all to get a better sense of what is green, what is transitional, etc. George, I've got a question here regarding some of the KPIs. So I'm going to read it out because it's quite a long question. Could you give us examples of any specific types of KPIs that SSE is committed to measuring and reporting on, and whether they impact the cost of borrowing on existing facilities? And then can other panelists give examples of other common KPIs they've seen and the effect this could have on funding costs? So George, can I turn to you first on some of the KPIs?
Yeah, I mean that sort of follows on from what I was saying before about that for SSE, one of our main goals is reduction of carbon intensity, and we are on a path that will should reduce it by 60% by the time we get to 2030. But it's maybe not the ideal KPI to look at when you're maybe putting a loan in place over say a 3 or 4 or 5 year period, and that's why for RCF we went with the ESG score provided by behaviours. So that we were at a level of 50 when we effectively amended the facility, and the goal was to get an increase of 5 on the score, and that was seen as being reasonably challenging, to give some credibility to the target. And for achieving that 5-point increase, we would get, or we received a 2.5 basis points reduction on a margin, which also feeds into commitment fees and helping reduce those. So actually, within 6 months, we managed to actually increase the score to 62. So well above the target that had been set by the bank. So we're very pleased with that, and it immediately meant that there was a benefit from adding that sustainability clause to the facility. When it comes to bonds, I think there was certainly a debate whether issuing a green bond a few years ago gave any sort of benefit at all. It was very difficult to prove that you got any sort of reduction in, say, you issue premium from issuing a green bond. But I think more recently there is certainly starting to be some sort of evidence that if you can effectively build up the investors and build the book on any new issuance, that you will get benefit there in terms of hopefully reducing the overall coupon you pay. And I think it just helps overall by having a much bigger investor base and a bit more diversification in terms of the investors.
So I was going to ask whether it's not just around the cost, but also around diversity. So did you find new investors who previously may not have looked at buying your bonds because it had sort of ESG credentials became much more interesting to them?
I think that there are definitely groups of investors out there that are purely focused on either green bonds or assets with good ESG credentials, and unless you can come to them with a good proposition and a good story, you're not going to get them to invest. And I think that sort of type of investors is only going to grow. So there is a big incentive to make sure that you do continue to receive focus from those types of investors.
Okay, and Robert, what's your view?
Yeah, so if you think about ESG-linked or sustainability-linked loans, so the loan market, the banks typically offer a 3 to 5 basis points reduction in margin if the borrower hits the sustainability KPI. That's a normal size that you'll see in the bank debt market. In terms of the KPIs, it's a wide range, and it really is what are the KPIs that's important for you as a as a borrower, and we've seen a wide range of things. I wrote some down quickly. So we've seen KPIs around carbon intensity. I mean, that's a very common one. We've seen food waste, reductions in food waste. We've seen increasing in the amount of recycled material in products. You know, there's quite a wide range of KPIs you can link at the margin to. It's just, as I said, it's just about identifying the ones that are important to your business and the material ones.
Okay, I've got another question. I'm going to turn to you, Martin, for this first, and then maybe Robert, you can jump in as well. As more data becomes available, as more transactions completed, do you think that borrowers with an established sustainability framework will be looked upon more favourably from a credit risk perspective than those who don't have a sustainability focus?
The credit assessment, ultimately, you still have to undertake a fundamental credit assessment. I think it's an input to, and the more data, the better that credit assessment that's undertaken it can be. But ultimately, it still only remains an input to that assessment, and it's not deriving or an outcome isn't trying to be derived from that is purely an ESG response. Ultimately, we're talking about credit risk and how do the ESG risk factors impact the risk that ultimately that issuer won't meet that obligation to repay that debt.
Okay.
Yeah.
And Robert?
Yeah, I guess from the bank side, you know, banks are starting to think about climate risk and the impact of climate risk upon their lending book. And you know, part of that is what's known as transition risk. It's, you know, it's a risk that clients face as we transition to low and zero carbon. And as banks start to understand that and gather the data, I think the thinking is that will impact ultimately upon credit risk ratings. But yeah, I think we're still a little bit away from that, but that certainly could be something we see, you know, further down the line.
And I know we've got sessions during the rest of the week from the major rating agencies talking about the impact of ESG on how they're adding it to their methodology. So it'll be interesting to see some of their thoughts on it. We've had a lot of questions around the sort of asymmetry between E and S and G. What's your stance around how E and S are moving at different paces this year and maybe for next year as well? I know. Do you want to start with that? Robert, do you want to start? Okay, go for it, George.
I mean, the S&G part of ESG it's very important to SSE as well. I mean, if you go back 5 years, we only had a couple of pages in our annual report on sustainability. And then in 2016 we actually published our first sustainability report separate to the annual report, and that was 20 pages long. And this year we've now published the sustainability report, and it's now 50 pages long, and that gives quite a lot of detail on what SSE sees as our social responsibility, and also the governance around that, and how it is managed within the company, what our objectives are, and how we're performing against those objectives. So I think the S&G part is certainly it's an area that is growing, and it's of importance to SSE in making sure that we not only show our environmental credentials, but we are paying service to the S&G part as well.
Could you give us an example of what S means for, just with George, could you give an idea of what the S means for you as a company? Give us some examples of.
So the S for probably the main goal we have for S is SSE is committed to being a real living wage employer. So, and it not only within the company itself, but we look into our supply chain, to make sure that everybody who's contributes to the SSE success is earning a fair wage, and we look as well in the supply chain to make sure that there's no issues around modern slavery, that we're not helping promote that anywhere around the world. That any procurement is very carefully checked when it comes to that. So those are the types of areas that we look at on the social side.
Okay, Martin, I cut you off, but you clearly had something.
Yeah, sorry.
you
Well,
wanted to add.
I jumped in. Yeah, I was just going to say that I think that in in the corporate space, the relevance of E and S is perhaps stronger than that of G. That's not to diminish it, but certain sectors are going to have greater risks associated with E and S than they are to G. Conversely, if you take financial institutions, for instance, they're going to have a much higher weighting towards G. I touched earlier on the way that we use the inputs and the risks associated with E, S, and G as an input to our credit assessment of issuers. What we actually do is we actually weight and consider the materiality of those risks. So if we were considering the SSE, for instance, we would be looking at the overweighting environmental, would then have a strong weighting towards social and a smaller weighting towards governance, and that allows us to tailor the consideration of those ESG risks to a specific sector and the importance of those in our credit assessment.
And Robert, anything to add to
that? No, not really. I mean, I guess similar to George, just to say from a HSBC perspective, we have our ESG report, and S&G is very, very important for HSBC as a corporate, as an institution. And we report on things like employee satisfaction and gender diversity. So yeah, all elements are important for HSBC as a corporate, similar to SSE.
Okay, we're sort of in the last, I guess, 7 minutes, and I've been told if we don't get to 7 minutes, they will just truncate this conversation. Martin, a question for you around, I'll just read it out again. Are there any benefits to corporates who are issuing ESG bonds and loans to demonstrate ESG compliance in their investment of excess cash?
That's a good question. I think it comes down to what's the input to the treasury function can have to the broader corporate sustainability program. Treasury functions, by their very nature, are always looking to add value to the C-suite, and ensuring that they're not a drag on that program, that corporate sustainability program, I think is vital to the overall impact. So yeah, it's part of that consideration. It's part of considering how your overall corporate your corporate treasury practices as they relate to ESG and your corporate sustainability program.
Okay. I'm sort of mindful we've got about 6 minutes. So I'm going to ask each of you some questions about 2021, and then I ask you for, and then we'll do a final question of things to take away for the audience. So, George, what does 2021 look to you from an ESG perspective?
I think one of the main things for 2021 hopefully will be the holding of COP26 in Glasgow. SSE is going to be one of the main sponsors there. We're hoping to hold some sessions and help develop the debate around action to help save climate and reduce carbon emissions, and see some real benefit come out from that conference.
Okay, thank you. Robert, how about you?
Yeah, so I think we've got through the entire panel. I don't think we've mentioned COVID-19. So, I guess the first thing I'm hoping for, I think, is that we return to something closer to normality. We start to realise some of the ambitions shown, certainly in the UK with our net zero plans. Next year, UK banks undertake climate stress testing as part of the Bank of England best stress testing scenario. I think it'd be interesting thing to watch out for will be how that deeper understanding of climate and of risks impact on loan portfolios will impact risk appetite of banks. I think that might be something which will start to become clearer next year. And we'll start to see new product development. We discussed earlier the development of transition finance products will be one to watch next year.
Okay, Martin.
Yeah, so I think continuing on from 2020, where we've seen biodiversity come into much sharper focus, COP15, the recent UN biodiversity conference, that will continue in 2021. HSBC very recently announced a JV with Pollination, who are leaders in climate change investment and advisory solutions. So I think that is very much of the time, and I think we'll continue to see a lot more in 2021 on biodiversity. And actually, anecdotally, we've received a lot of requests for information around that JV, even though we won't have a product probably until Q1 of next year. So I think that shows that there's pent-up demand for information around investing in biodiversity. I think generally, to Rob's point, we're going to see a lot more innovation, a lot more product coming to the market that's sustainability linked. From an HSBC perspective, we will be bringing, I mentioned it earlier on, we will be bringing to the market an ESG money market fund. We actually have a global framework for green impact investing. That money market fund will meet that criteria as we define. And what I would say is there isn't actually a money market fund, ESG money market fund on the market that meets that criteria. So what we're looking to do with that is actually really raise the bar, as it were, for the market. And then finally, I think we'll see of the ESG, I think we'll continue to see more focus on the S and supply chains. And I think that reflects the broader and growing calls for greater transparency on corporate activity.
Okay, and just on the S and supply chain, there was an article in the Treasurer during the summer where we had an interview from a woman who runs an organisation that does look at the tools that are available and the advice they provide to companies around monitoring anti-slavery across their supply chain. So I'd encourage you all, if you're interested in this area, to do have a look at the Treasurer magazine. We've got really just a couple of minutes, so we can ask some very quick fire questions. Robert, I think we've covered this already, but does ESG related lending offering pricing benefits to borrowers?
Yeah, I mean, we've kind of covered, haven't we? So ESG-related benefit lending, yes, it offers that margin reduction if you meet the sustainability KPIs. It's generally 3 to 5 basis points.
Okay, and I'm just mindful we've only got a couple of minutes. So can I ask you just to leave one thought, each of you, with the audience joining us today? George?
Yes, I mean, SSE's overarching goal is to take meaningful action on carbon reduction and look to work with government and regulators to make sure that renewable projects can be built as soon as possible in the UK and hopefully help the UK recover from the current COVID-19 economic crisis.
Martin?
Yeah, I suppose it sounds corny to say we're here to help. So, I think what I'd say is, regardless of where you are in your ESG journey, whether you're right at the beginning trying to develop your philosophy, or even if you're at the more advanced stages, we would love to hear from you. We'd love to hear your perspectives and share our knowledge and expertise in the area. And if that helps to further develop your ESG philosophies as they relate to cash investing, then we'd love to take you on that journey.
Okay, Robert?
Yeah, very short one. So the sustainable finance market is active and growing, and it's increasingly accessible to smaller corporates. So we're helping corporates of all sizes access sustainable finance market, and very keen to talk to customers about that.
Okay, super. Well, I've enjoyed hearing from a corporate on its ESG journey, and I've definitely learned a lot more about what I don't know around the issues that banks face in building their product suites. There's clearly a lot of efforts by corporates and banks to enable moves to a greener and fairer planet. And it seems that the more we understand each other's challenges, the more likely we are to deliver on our corporate goals. And I really like, Martin, your point around, having these conversations with banks, with other people, with peers, with people like George, to understand what things people have done to achieve some of these targets. We've got more sessions during the week, specifically on ESG. But as an ex-treasurer, I'm aware that ESG isn't just a topic in isolation. I'm personally looking forward to the panel on Wednesday, which has 4 economists. I should have checked what a collective noun is for 4 economists, but I'll leave you to work it out. And finally, please complete the session survey. Do visit the virtual exhibition hall. As said at the beginning, you can watch this session on demand for up to 30 days. And feel free to continue the conversation, chat directly with fellow attendees within the networking lounge. So finally, thank you, Robert, Martin, and George, and to HSBC for sponsoring the stage session. Thank you, everyone.
Thank you.